So welcome to this video. In this video, we are going to start about cost accounting. So we'll be looking at what is cost accounting, what are the objectives of cost accounting, and in depth about the various terminologies involved in cost accounting. Okay, why is this required? And we'll also do a lot of sums here. Okay, so that by the end of this cost accounting chapter, you should be familiar with what is cost accounting as well as what is a cost sheet. Okay, so we'll start from here. So we'll start from the meaning of cost accounting. So cost accounting is defined as the process of accounting for cost, which begins with recording of income and expenditure or the basis on which they are calculated and ends up with the preparation of periodical statements and reports for ascertaining and controlling costs. Okay. So normally what we do is we are very familiar with financial accounting. So financial accounting is prepared to show what is going to be the profit of the company, okay, for the year, and what are the assets and liabilities of a company. So that's what we usually try to show in P&L account and in balance sheet. So profit we can get it from statement of profit and or loss account, and asset and balance sheet we can get it from the SOFP, okay, statement of financial position. So these are the two statements we prepare and we are going to get these numbers. But what happens here is we know the profit of the entire company, okay, or sometimes even the entire division or entire department we can find out. But if we want to find out what is the cost, okay, as well as the profit of producing a particular product, okay, or giving a particular service, then how do we do it? Okay, see, financial accounting will not capture these data. For example, if you take a product, there are some materials involved. You take any product, we'll take a something like a small radio set, okay, small radio set. So if you take a radio set, there are some components being involved, okay, there are some wires, there is a transistor, so there are some what to say components which are there, and you need a labor to assemble this phone, okay, you need labor to assemble these phones, okay. So you need labor, you need supervisors to supervise these people, okay, you need to have a place to produce this product. So there are so many things which have to come together to produce a smartphone here, okay. So all these are driving the costs, okay, all these things are incurring the cost of the phone. So we are not trying to find out the profit of the entire company, but we are trying to find out individually, okay, individually whether a particular model of phone, okay, for example model number A2, okay, model A2 phone, okay, how much is it costing. So only when we know what is the cost, okay, only when we know what is the cost for this particular model, okay, assume that it comes to something like 6,000, okay, then what you could do is you can add a profit for this phone something like 2,000, and then you can sell it, okay, you can have a selling price which is something like 8,000, right? So you can do this. So to know your selling price, you should know how much you are going to profit you want, and before that you should know what is the cost involved. So the cost involved is as actually depending upon you have to find out what would be the rent that is spent for per phone, what is the labor cost for per phone, what is the component cost per phone. You should know all these things, okay. So this is for model A2. In the similar way, if you take a smartphone company, they're not going to produce one model. Next model would be like M6, okay, or A1. So there will be so many models. For each model, they have to find out whether what would be its cost, okay, what is the profitability that we want, and what can be the selling price, okay, what can be the selling price, okay. So this is how companies usually try to find out the cost of each product, okay. So this is not only applicable for products, you can also do it for services. So in terms of services, for example, a particular bus route, okay, so there are in many places the bus is operated by private companies. So the private companies need to know which particular route is profitable, okay. So what they do is they try to find out the costing for that. So they have this routes, okay. So for example, from city A to city B, what is the what would be the cost? So they will put this route here, A to B, that is the city, and they will try to find out what is the fuel cost, okay, what is the driver cost, and what is the repair cost because of running in that route. For example, if it runs on a highway, if this route is on a highway, then the repair cost is very minimal. If it's on a, if it connects to villages, there it's going to incur a huge amount of repair cost because the roads might not be that great. Okay, so these are the concepts here. Okay, these are the concepts here. So what happens is we have to find out the fuel, okay, the fuel cost, the driver cost, the repair cost. If there's any other cost, okay, we have to add that also. Finally, we'll get the total cost of running the bus on that route, and we can then add our profit and what would be the ticket price. Okay, what would be the ticket price? So this is how a particular ticket price is formed. So if you think that ticket prices are like randomly formed or they have some other logic, no, their logic is this. So this is how everything is formed. Okay, whether it's going to be a product or a service, everything is formed in this manner. So could you get this information, could you get this information from, sorry, okay, could you get this information from a financial accounting? Is okay, this is financial accounting. Whether you can get it from here, the answer is a straightforward no. Okay, the answer is a straightforward. So you can't get this information from financial accounting because financial accounting, okay, is not prepared for finding the profitability of products or the costing of a product. Okay, it's not prepared for that. It's prepared for the overall profitability of the company. So this information, financial accounting, is usually prepared for external stakeholders. Okay, so external stakeholders could be, okay, external stakeholders could be like government or shareholders or customers or suppliers. For their purpose it is prepared. But if you take a cost accounting information, so these are all cost accounting information here. Okay, this cost accounting information is for internal stakeholders. Okay, so who are internal stakeholders is internal stakeholders are management. Okay, they are like management, and management wants this information here. Okay, so usually you cannot find out these information from financial accounting. Okay, so whenever you get an annual report of a company, you will not find these information at all. So that's about the key concept here. So we look at what is an objectives of cost accounting. So the objectives of cost accounting are these. Number one, ascertainment of cost. We need to know what is the cost of producing a product or a service. Cost control. Once we know what is the cost of a particular product or service, we can then find out ways to control it. See, because if we don't know what is the cost, we cannot control it. Okay, see here, if you want to, if you know what is the cost, okay, we could try to control it at 6,000 itself, and we can ensure that we will get this profit. But if we don't know how our cost is incurred, then we can never reduce it at any point of time. So only when we know something, we can start to act on it. So next one is cost reduction. So we are trying to reduce the cost here, or assisting management in decision making. So it helps in management to make decisions. For example, we'll take M6 model as a example. So the M6 model's phone comes to 10,000. Okay, the cost. We want a profit of at least 3,000, and we could sell the product in the market for 13,000. Okay, but in the market, if you see, our competitor, okay, our competitor is having a phone which is being sold at 11,000. So the concept here is, should we produce M6 or not? See, even if we produce and sell, no one will buy it, because the similar kind of a model is available for 11,000 and we could only produce it at, and we want to set a selling price of 13,000. So what happens is, it's not possible to, it will not sell a lot. So that's about the concept here. So the next point is determination of selling price. So that is what we saw here. Okay, add the cost with the profit, you will end up with a selling price. And ascertainment of profit. So once you know your cost and you know your selling price, you can easily find out your profit. Okay, so that's about the concept here. Okay, so let's look at the limitation of cost accounting here. See, the limitation works like this: lack of uniformity. See, there is no any particular, there's no format. Okay, there is no format for cost accounting. Okay, there is no, actually, even standards are not there. Okay, so what happens is, there is no format. Okay, as there is no standard or accounting standard or anything, what happens is, every company can prepare, okay, every company can prepare their cost accounting in the format or in the way they want. Okay, so you cannot compare two companies cost accounting at all. So the second one is, it's a second hand data. Why it is second hand data? Because most of the data comes from, okay, it comes from the financial accounting only. So if a company relies on financial accounting information to be used in cost accounting, that is not such a great thing. So you should separately capture cost accounting information. The next one is conventions. See, there is no accounting standards, there is no cost accounting standards. Okay, as you don't have any cost accounting standards, the comparison between from one company to another company is not possible. Okay, and another thing is, if you have one cost accountant, okay, for some 5 years, and you are going to, and he quits the job, and when you put a new cost accountant, okay, the report that they prepare, the numbers that they capture would be like way different, because there's no accounting standard. Each cost accountant will have his own opinion. Okay, and uncertainty. So this leads to uncertainty. Operating cost accounting itself is costly, because you have to separately capture data. Okay, so data capture, okay, is costly. So where will you get this component information, labor information and all? Okay, finding them, it is costly. And applicability can be difficult. Okay, it not in all the fields it's like so easy and quick we can do it. Okay, for example, you put components we know that are being incurred for the smartphone, we'll know. Labor, okay, it becomes difficult here. There are like several laborers who are used in the process of manufacturing a phone. So how can you put their cost to a phone? Okay, that becomes difficult. Rent means all the models, okay, A2, M6, A1, all are going to be produced in the same factory. So how can you find out the cost of producing one particular model of phone? Okay, so there are like several difficulties here, but still, this is a useful concept. Okay, companies are going ahead with this concept here. Okay, so these are the limitations of cost accounting. So what we'll do now is, we will move on to the terminologies. So only when we know the terminologies of cost accounting, we could apply it. Okay, so we'll start from the terminologies of cost accounting. So the first terminology is cost object. Okay, what is a cost object? See, cost object refers to anything for which we want to find out the cost. Okay, anything. Okay, for example, here we wanted to find out the cost of a smartphone mobile. Okay, so cost of smartphone. Okay, that was the cost we wanted. Or here, if you see, the cost of operating, okay, cost of operating bus between A to B. Okay, this is a route. So anything for which you want to have a separate measurement of cost, okay, that is a cost object. So it can be a smartphone, it can be a route, okay, it can be a department, it can be anything. Okay, it can be a department, it can be a particular branch office. You want to find out the cost of operating a particular branch. For example, you take like Bata showrooms. Bata showrooms are located in many places. Okay, if you want to find out whether each and what is the cost of operating one Bata store, that is a cost object. Okay, for anything you want to find out the cost, it's a cost object. So then we move on to cost unit. Here we'll move on to cost unit. Cost unit is a singular item. Okay, this is the last singular item that you can divide on that particular product or service. For example, a cost unit is a unit of production or service in relation to which costs are ascertained. Okay, for example, textile cloth. Okay, textile cloths are measured in terms of meters of cloth. Okay, they're not like measured in terms of inches or kilograms. They are measured in terms of meters of cloth. Okay, so when you go to a shop, you want to buy some rolls of textile, what you will ask is what is the cost per meter. Okay, and that's how the shop person will also tell you. Okay, so that is a measurement here. For ice cream, usually it will be in kilograms. If you buy in small quantity, it is in cups. Okay, but minimum, if you are a manufacturer, you will not speak in terms of cups, you will speak only in terms of kilograms, because cup size can change. It can be 100 grams, 50 grams, 200 grams, like that. But they speak usually in terms of kilograms, because as he is a manufacturer, he tries to find out what would be the cost of producing 1 kg of ice cream. In terms of paint, it's going to be liter. Okay, so in terms of smartphone, it's going to be cost per smartphone. In terms of operating a bus, it's going to be cost per kilometer. Okay, it can be cost per kilometer. So that's about the concepts here. So we'll move on to the next one. So the next one is going to be cost center. Okay, see, cost center is a production or service location, function, activity, or equipment for which costs can be ascertained. Okay, so cost centers are it is similar to cost object. Okay, we are trying to find out what is the cost of operating a department or a machine, but usually this is under a control of a particular person. Okay, for example, cost object, what is the cost of producing a smartphone? That is for what to say, for producing a particular smartphone. What is the cost we are trying here? But what is the cost of running a department? See, some manager is running this department, right? Some manager has some activity and he is running the department. So if he tries, he can control the cost. So if there is a element of controllability by some manager, it becomes a cost center. Okay, and the machine is also a center, because for every machine usually there will be a supervisor who tries to operate the machine in a particular way. Okay, so cost center is, again, we try to find the cost of something, cost of a department, a machinery, or a branch, or anything. But here there's a particular manager who's in charge. Okay, who can control the cost to an extent. Okay, so the difference between object and center is, object is just a pure measurement, center is measurement, but where a human has a control over the cost. Okay, the cost incurred. So that's about the cost center here.